Hey traders, Cousin Vinny coming to you on January the 5th, Sunday from theclosingprint.com with a market read and a short watch list. In this edition, what we'd like to cover is the indices, the S&P 500, the S&P 1500, which consists of the 600 small caps, the mid caps, and of course the S&P 500. Cumulatively, the industrials, the comp, and of course the Russell 2000. One thing to note that the New York advanced decline is confirming higher prices and broke above December resistance. So we continue to be at highs. Noting that the XLY consumer discretionary, being the most economically sensitive of the sectors, continues to correlate highly with the S&P 500. Showing no weakness currently. Of course, weakness would be concerning, and that's something that we'll be watching for in this first month of the new year. XLI continues its leadership as well, outperforming the XLY. We'll get to that chart in a minute. Relative strength to the S&P 500 with new highs last week. The XLF and the XLK, of course, is what we're looking at for trades. We currently have trades on Citigroup and Bank of America. We'll cover the finance sector and what we see going forward. And the last piece here, this is mostly from my friend Kyle, who sent me an article that billionaires were dumping stocks, and I got a little bit of a chuckle. I just wanted to do some research and see what we came up with. You'll be very entertained if you want to check that out at the end of the video. This is a chart of the NASDAQ composite, and while we have bounced off of this upper trend line, we continue to show strength. Bullish percent continues to move higher. The volume wasn't as great as some of these peaks here, so less concerning there. We are sitting right on top of the 10-period moving average here, and all the averages are continuing their ascent higher. Now looking at the indicators, we can see bullish percent is moving back towards the midline. The number of stocks trading above the 50-period moving average is at 71%, and starting to get near a zone where we would be hot, but not quite Miami hot. MACD looks like it wants to turn over, so I have a yellow signal here. Until that actually occurs, these will stay yellow. And NASI continues to move higher, as well as a bounce on the NASDAQ Summation Index, the NAMO. And of course, as I mentioned previously, the XLK is starting to show relative strength to the S&P 500 after lagging in relative strength over the majority of 2013. So this is a chart of the XLK, the technology sector portion of the technology spider. We can see that we've been in an uptrend since 2009 bottom, and for the most part of 2012 into the midpoint of 2013, we saw relative strength to the S&P 500 lagging, and we're currently breaking out of that downtrend after moving sideways. So it could be a point where the rotation into XLK starts to perform, as Arthur Hill had pointed out over in stockcharts.com. So I'd be watching XLK as well as XLF, which we'll get to in a minute. And finally, with the comp, the high-low indicator, which is the number of new highs versus new lows, you can see that we had a crossover in just before Christmas, and the market continued to move higher. We're at the upper trend line now, but the breadth still continues to favor higher prices. Perhaps a flag here on the comp. Note the 20 period continues to move higher, and we could come down and test that, as well as this level here that we broke above back in December. This is a chart of the Dow Jones Industrials, 30 stocks, so just keep that in mind. We are drifting back down below 70 on RSI, and Bollinger Bands are starting to come back towards the mean, with MACD showing a little bit of a topping pattern here. We got a sell on the stochastics, slow stow, so that was no surprise last week. And ADX looks like it may be peaking, but it's a little premature at this point with the remaining indices doing well and showing a bit of consolidation here. This is a chart of the New York Composite. You can see the same thing here with the New York high-low, that we had a crossover to the upside. And we have this level here that we could come back down and test. This breakout level at 10,229.57. And finishing up with the New York Composite, this is a chart of the New York Stock Exchange Composite Index and then the advanced declining issue. You can see that we clearly broke above these levels in December and continue to move higher and support higher prices. So we could flag out here and move higher going into January. This is a chart of the S&P 500, my indicators, and we can see that we're up at that upper trend line, sitting right on the 10-period moving average, the EMA, for 2 days now. There's also this Kirby shelf down here at 1810 that I mentioned late on Friday. So we do have some support there. We can see bullish percent did drift lower into Christmas and now has peaked, or excuse me, has broken back above this level. The NYSE, New York Stock Exchange Summation Index, is moving higher, so there's no bearish signal there like we saw here. The NYMO is bouncing, and MACD looks like it wants to turn over, so we have a yellow signal there. ADX has already peaked, so keep an eye on these. The number of stocks trading above the 50-period moving average is at 71.6, and we had touched this trend line here, not surprisingly. And we had a sell signal here in late December that peaked, and now we're turning back over again. So we'll see what happens with prices going into the remainder of January. As Arthur Hill mentioned over at stockcharts.com, CCI, when it drops below 100, we have to watch for a possible change or correction in prices. So we'll be watching these signals here going into the remainder of January as well. And finally, with a chart of the Russell 2000, we can state that we're still inside of this channel, moving higher. We're sitting right on top of the 10-period EMA, and we bounce before we get down to the oversold level on the slow stochastics. MACD looks like it might be peaking, but we'll keep an eye on this as well going into the week. Note that the Russell relative to the S&P 500 has formed a little cup here and is continuing to move higher, so we should continue to see strength in the Russell relative to the S&P 500 going into the middle part of January. This is a chart of the ARCA Institutional Index, the 75 stocks that I watch that institutions have as core holdings. We can see this clear support level here, just right in line with the 382 from these lows, this pivot low and this pivot high. And we can see we're quickly accelerating towards an oversold condition and a possible buy signal on the slow stow 5-1. MACD is flattening out a bit and turning lower, and a bullish percent did give us a sell signal a few days ago prior to this little peak here. So we'll be watching all of these things going into the week. One of the sectors that we noted was showing positive correlations, and it appeared money was rotating into was the XLF as well as the BKX, the banking sector. We can see that the cumulative up-down volume percent continues to move higher and broke above these levels of December, while prices are at highs and flagging here. Note these are the top 10 holdings. This is a chart of Citigroup. We noted late on Thursday that we saw this pattern on Bank of America as well. I'll show you that chart in a second. We had this Kirby level that we were dealing with, so we bought call options right here, anticipating a break above this level on Friday. We only had a quarter position on Thursday, so on Friday we added as we got into this zone here. Let's take a look at the weekly. We are in a nice tight pennant right here. We built a handle, a W pattern inside of a cup and handle, and we're looking for this to break out in the near future. Hopefully that would happen on Monday and Tuesday this week on Citigroup. Now we took a position in Bank of America on Wednesday, citing this same pattern here after we broke out of this descending bullish channel. We broke out, we consolidated, we came down, tested the 30-period moving average, and we got tighter action, and we stayed above the 10 and the 30. So this looks like this is going to continue to be bullish going into the first part of the year. So we could see a little bit of weakness, but it's very possible we could see strength going into Monday on Bank of America. But this is what got us into Citigroup as well on Thursday. This was Wednesday when we noted this pattern on Bank of America. Also note the Kirby levels here. There's no resistive volume up here currently. This is the MACD on Bank of America. Note that we had a crossover here. So this looks bullish. We had some really nice volume on Thursday and Friday. But we are overheated a little bit on the percent B. We're above the upper Bollinger Band. Skipping back to Citigroup for a second, I just wanted to point out that this majority of the volume that was traded on the Kirby, where prices are relative to that level, as well as the levels that we saw before the sell-off in 2007, 2008, when Citigroup was into some very risky investments back then. And the highs that we saw back here at 54.14, we are now challenging that level going into the first part of 2014. So I would expect that we continue to see higher prices in Citi, with prices holding above both the 10 and the 30 period moving averages for all of 2013 and a good part of 2012. So the fact that Citigroup has jettisoned a lot of its toxic assets that got us into this trouble in the first place, with big banks, money center banks, with derivatives and so forth, we should continue to see this strengthen going into 2014. And with Bank of America, we can see the same thing, that we have this nice V-shaped pattern. We continue to move higher. We've traded above the 10 and the 30 period moving averages for the greater part of 2012 and all of 2013, and continue to move higher. Note this Kirby band here that we could get above and continue to see prices soar above that. So Bank of America looks like a longer term play despite all of the bearishness that people are talking about at present. And when I talk about bearishness, I'm talking about the media and people who are struggling to find things to say about the markets to sell newspapers and airtime. Basically noise. Looking at the sectors, candle glance, we can see the banking index continues to make new highs. Biotech got a triple top here that we could see some continuation to the upside, so watch which direction the XBI breaks out in the near term. The builders are looking pretty good with higher highs. Real estate showing a move off of this double bottom pattern here and dealing with the 50 period moving average here on the daily. Note IYT as well at new highs. The semis continue to move higher. Materials are at new highs. XLF, which we're focusing on, XLI again continues to move higher. As we mentioned earlier, we had relative strength, and the XLI led through 2013, as well as XLY, which we could see continues to move higher. XLU is obviously lagging, a defensive sector. XLP moving sideways, looks like this could break down. So I mentioned a couple of stocks that in an article that I'm going to cover here shortly, dealing with Warren Buffett, Soros, and a few others getting out of Procter and Gamble and a few others. It just looks like it's rotation out of those sectors, and something we'll watch with some skepticism. Healthcare XLV is right at the double top, so we'll see where this goes as well. But for now, we're watching XLF, and we'll keep an eye on stocks in that sector for continued rotation going into the first part of 2014. Relative strength continues to move higher, and we can see on balance volume is continuing to move higher as well. XLF relative to the S&P 500 has gotten off of or moved off of this low that we put in November and continues to move higher. So let's take a look at the XLF financials in a candle glance format, so we can see which ones are leading and showing strength. Note American Express up here flagging. Bank of America we already covered. Avalon Bay's looking pretty decent. Bank of New York Mellon at highs. We could see this breaking higher. BlackRock has flagged out here and just above the 20-period moving average. Boston Properties continues to cruise higher. Looks like it could get us a bullish cross on the 10 and or the 20 and the 50-period moving averages. Charles Schwab continues to move sideways. We'll watch that. It's in a pennant pattern currently. And Ameritrade broke out last week. Somebody mentioned in the chat room on Tuesday or Wednesday that this could possibly break out, and we did see that. And of course, Fifth Third Bank Corp and Franklin. Goldman Sachs looking good here. Morgan Stanley is one I have my eye on, as well as Met. Let's take a look at Morgan Stanley. You can see that we're cruising along the 10-period EMA, and that we have these highs to deal with. We could break out similar to what we saw on Bank of America and Citigroup if you draw a trend line through here. Looking at Met, I like this pattern as well. We had a nice pullback to the 30-period. We broke higher. We came down to the 10, tested that, and now we appear to be moving higher. Legg Mason was another stock I was checking out on Friday. Don't currently have a position, but we came down, tested the 10-period. Got a nice little box set up. Remember, you trade long when prices are above the 30-period, and prices continue to move higher as well as the moving averages. So watch this little test we saw on Thursday continue to move higher. This could bolt higher on Monday. One of my other favorite stocks to trade is Wells Fargo, looking pretty good here, holding off the 20-period moving average, very similar to Legg Mason. We have this pattern here where we're broke above this level, and we're holding. We have no Kirby per se up here, and relative strength continues to move higher. All these names, if Citigroup and Bank of America continue to move higher, would be names that I'll be watching for possible longs going into the week. And finally, an article a friend of mine sent me that just shows you that noise and news articles are just that, trying to sell airtime, newspapers, and so forth. This is an article that came out on January 4th that he's all excited about, worried about a market top. This particular economist that knows why billionaires are dumping stock, it just sort of funny when I read it and started looking into it. Note Warren Buffett and what he's talking about with Johnson & Johnson, Procter & Gamble, Kraft, and also with Soros dumping stocks. Note right here where it says dumped 14 million shares of JP Morgan Chase. And finally that, oh, that was Paulson. Finally that George Soros is dumping all of his banking stocks. And now that was January 4th. Now look, if you did a bit of research, you could see that on February the 10th, why billionaire Warren Buffett is selling or dumping his stocks. And you'll see the same entry into this article with these same three investors. You'll see down here where Paulson is selling, and that this particular economist was predicting a 90% correction in the market back in February 2013. We have yet to see that correction. And breadth and a lot of other things continue to indicate that the market is strong and not something you're going to see turnover anytime soon. A top will take months to occur, So there'll be plenty of warning for your traders if you're anticipating a bear market or correction. We could see a small correction of, say, 5 to 10%, which we're overdue for, but other than that, everything looks good for continued moves higher. If you want to see these articles, by the way, you can check these links here up here at Newsmax, and again here at KateNews2day.com. It's just kind of funny when you see this kind of thing being mentioned as a reason to sell stocks. Again, this is Cousin Vinny coming to you from closingprint.com. So take care. We'll talk to you soon.